Hello, I'm Christina Nicolaides. Welcome to Win the Money, Bank to Binary's weekly discussion programme, where we take a closer look at the big economic events that impact the financial markets. This week we're going to focus on the central banks and how investors can use changing interest rates to place in the money binary options trades on currency pairs. As usual, I'll be putting these questions to Lauren Carmouche, Senior Investment Analyst at Bank to Binary. Hi Lauren.
Hi Christina.
Today's the 30th of May 2014. Next week, the European Central Bank is scheduled to announce its minimum bid rate, which is the short-term interest rate on the money that provides liquidity to the European Central Bank. Mario Draghi, the President of the European Central Bank, has indicated that a rate cut may be on the cards. So 2 questions for you. 1, do you think a rate cut will be announced on Thursday? And 2, what effect could a rate cut have on the markets?
Absolutely. I think in terms of the euro, the cost would be far too great if expectations weren't met. We are expecting a depreciation of the euro as a result of the central bank cutting the policy rates, and we would expect the deposit rate to fall below 0 at that point. The idea behind that is to weaken the euro, which has been trading persistently high levels compared to major peers. So the statement next week should provide put opportunities for binary options investors.
So would a negative rate given the Eurozone economy then jolt its needs, in your opinion?
Well, let's first start thinking about what these negative rates actually mean. So the central bank is thinking about charging interest for overnight deposits that are held at the central bank by other commercial banks. So if they're being charged to hold their deposits, it would encourage them to start lending. They will find other sources for these deposits, but it shouldn't mean that depositors are too negatively affected. The ECB want to affect inflation expectations. So if they're worried about a disinflationary cycle within the Eurozone, so they want, the problem with that is that depositors will defer expenditures if they are not able to get access to credit. So the idea behind dropping the deposit rate below 0 should encourage lending, which means that the Eurozone consumers are able to spend.
Why do you think that the ECB has struggled to ignite Eurozone economies?
Well, the ECB have taken quite a passive role in the recent past, relying on Mario Draghi talking down the euro to dampen euro appreciation. Unfortunately, the Fed have also kept interest rates very low. They've been reluctant to commence their forward guidance policy. So the US dollar interest rates have been very low in the US recently, and so the US dollar has been trading very low compared with the euro. I think what we're seeing here is more of an issue of the limitations of monetary union. Stressed countries within the Eurozone have been impacted by low inflation. And that's been as a result of credit constraints within these countries. The major issue that we're having is heterogeneity, or the differences between countries within the Eurozone. And it's very difficult to implement an effective centralized monetary policy framework in that case. So we're probably going to rely on a little bit more stimulus, and we're probably going to need a little bit more than just rate cuts to pull the Eurozone into a recovery.
Thank you, Lauren. I'm Christina Nicolaides, and this has been In the Money with Lauren Carmouche, Senior Investment Analyst at Bank to Binary. As always, be sure to check your inbox for our weekly market analysis emails. Here's wishing you all a successful week on the markets. So until next week, goodbye.